Welcome back to my channel. So today we are going to talk about buying or leasing a car. So I figure around this time a lot of us are actually buying our first cars, and so in order to do that, in order to prepare you for what you're going to experience, I wanted to share with you some information that I've learned throughout my car buying process. So a couple things you should consider when buying a car. Are you going to finance the car, or are you going to lease the car? So over the course of this video, we're going to talk about the differences of financing a car versus leasing a car. Financing a car, again, means that you are essentially renting to own over a term of 12 months up until about 72 months. You are going to make monthly payments on a car that at some point you will own. You will get the deed and it will belong to you. So a couple of things to know about financing a car. Typically when you finance a car, your finance charges, which is the interest rate, are going to be a bit higher than if you were to lease a car. With that being said, your monthly payments for a financed car may be a bit more expensive than if you were to lease a car, just based on the interest rate. When you are financing a car, you have an unlimited number of miles that you are able to put on the car versus if you are leasing a car. So you have full privilege to put as many miles on the car as you want. A couple drawbacks with that though is when you get ready to potentially sell that car or sell it privately or sell it back to a dealership, the mileage may hurt you when it comes to how much money you can recoup for the car. You have to be careful because when you finance a car, if you try to get rid of that car before your term is up, there's a chance that you will be upside down on your payments. So what does that mean? Say for instance, you finance a car, you keep it for 4 years and your your finance term was 6 years, then you still have 2 years of payments left on that car. So when you take it into the dealership to maybe trade it in for another vehicle, you have to hope that whatever they're going to give you for your car is enough to cover those last 2 years of payments. If it's not enough, then whatever is left over from your previous car will be added to your new car. So you have the likelihood that your monthly payment on your newer vehicle is going to be more simply because you didn't have enough trade-in value for the car that you brought in. Hopefully that makes sense. Let's say you finished your term, say your term was 6 years, and you finished 6 years of payments. When you go in to purchase maybe a new car, you can take your former car and trade it in and use whatever money that they're going to give you for it toward a newer vehicle, and then you won't be upside down on your payments. But the thing to remember is that you need to finish the term of your finance in order to not be upside down. So that's all about financing. So when you lease a car, it's the idea of you're simply just renting the car. And a lot of people don't like the idea of leasing because they're like, well, I don't get to keep it. That's really not true, but we'll talk about that in a second. So when you lease a car, typically your lease is going to be 24 to 48 months, depending on who you are dealing with. So that's 2 to 4 years. Most dealers want you to only lease a car for 2 to 3 years. If you pay very close attention, you will notice that the longer you keep the car, the more your payments are going to be. Kind of interesting, kind of weird, but I think it has a lot to do with the mileage that you're putting on the car. The second thing is usually when you finance a car, you finance a car through banks. So let's say you go to Ford. Ford has relationships with banks, and banks will finance you for your car. However, when you lease a car, typically you can do an in-house leasing with that company. So Ford has its own leasing agency, which is called Ford Motor Credit. And I'm talking specifically about Ford because that's who I've done my dealings with, is Ford. So I pretty much am well versed on them. So Ford Motor Credit, because I lease my car, will finance me in-home. As a result of that, your finance charges are going to be lower. So there are incentives to leasing cars. One of those incentives is low interest rates. So sometimes you can get as low as 0%. I've had 0.50, so I've had half of a percent. And they have that option because they're going to keep that relationship in home, because they're hoping that you will lease again with them. Okay, so it's kind of like trying to build a rapport with you, so they give you a pretty low interest rate. Okay, as a result of that, if your interest rate is low, chances are your car note is going to be lower. And this is all based on the car that you get, the MSRP of the car, how much money you potentially put down if you had a trade-in. But typically, lower interest rates help you have a lower car note. The other part of the lower car note is when you are leasing a car, you are only paying what they call the depreciated value of that car. So let's say you lease a car for 3 years, 36 months. You are only going to pay about half the price of that car. For example, let's say you get a $19,000 car. Over the course of 36 months, you will probably only pay about $9,000 as a result of a low interest rate and the fact that you are only paying a portion of the value of the car. You have the option of having a lower monthly payment when you lease a vehicle. So, when it comes to miles, there is a mileage restriction on leased vehicles. Most companies will cap you between 10 and 15,000 miles that you are allowed to put on a leased vehicle. Now, that's not to say that in 1 year, if you go 15,500, there's a penalty. No, what it is over the totality of you having that lease. If you go over, then there is a consequence for that. So in my contract, if I went over the 36,000 miles that I was allowed to have, I would have to pay 10 cents per mile. So you are under the restriction of mileage. If you go over the miles, you will have to pay. If you go under the miles, you're good. At the end of your term with a lease, you have options. 1, get rid of the car. 2, keep the car, finance the rest of the remaining balance on the car. Or 3, give the car back and then get into another lease. The choice is yours. If you're just like, I like to have a new vehicle every 2 to 3 years and it's still going to be under the warranty regardless of what happens, then by all means lease it. Please understand, almost every celebrity you know leases their vehicles. Chances are they are not financing those cars. They are not paying up front. They're like, oh, I want to drive around this Maserati for 1 year and then I want to give it back. That's what they're doing. So you can do the same thing. With that being said, if you choose to lease a vehicle, new or used, your insurance is going to be a bit higher because there are extra packages that you have to add on when you lease a vehicle. Understand that purchasing a car is a major financial decision and you got to be okay with whatever happens. So just keep all these things in mind when it's time to make a car purchase. Buying a car should be a really fun experience. Yes, it's a scary situation, but when we enter adulthood, these are just some of the perks that we get. And as long as you are informed and you are prepared, then this should not be a scary situation. I mean, yes, the most adult thing we've probably done thus far is get a Sam's Club car or a Costco car. But you should definitely buy a car because it's going to have major benefits not only on your life but also on your career choice. As always, if you have questions, comment below. Make sure you thumbs up the video. Make sure you subscribe. Don't just watch my video and not subscribe. And if you have some topic ideas, hit me up. I'm all about doing whatever you all want to talk about. So until the next time, and I'll see you later.